Great. Good to have you here. It's a beautiful day, but I'll go straight to my presentation today. And I'll be speaking about a few things. VSA, many of you are quite familiar with this concept. It's not a new concept, it's been there. I'll speak about why retail traders struggle, why retail traders fail. And then I will actually speak just on a light touch how or what methods or how should you attract capital. If you're looking towards going big in this business, then you probably think of starting a hedge fund. But you have to attract capital the right way and not through soliciting for money from people through unorthodox manners, ways or something. Yeah. So awesome. So I'll go straight to my presentation. I will start speaking about VSA, and VSA simply means volume, spread, analysis. Volume, we all know from our basic economics that volume is purely demand and supply. Demand for you to demand for something, there has to be some supply to cater for the demand. And when we apply this in the context of the forex market, it becomes a little bit easy to spot market the faces when the market is just about to turn. You can catch crucial turning points, and I will speak about why we are commonly misled by the conventional knowledge out there and what people are actually teaching on their websites and everything. But it is because the fundamental reason about what we are doing and why we are in this business, personally for me, I'm passionate about it. I love it. I own it. And when you consider this as a business that is going to make you money, and a lot of money, then you need to be very serious, and you need to know, and you need to connect with the right information. But it's the exact opposite. What we find outside there is a lot of jargon that is not going to help us remain consistently profitable. It is important to understand what works and what doesn't work. But the only way you can prove it to yourself is, first of all, you need to test it. You need to be there. You need to work with that system and see if it's probably making you money, or is just another story, another theory. Yeah. Personally, for me, I don't fancy theory. I fancy things that work. That's why I don't conform to schools of thought that say what we've been taught outside there. Risk reward. Who told you? Let me know. Let me not go there. But the thing is this: we need to look at markets as pertains to what moves the market. If you're new to this business, you need to understand that it is not your business, neither is it my business. Forex market is actually the turnover has actually increased to $5.3 trillion, and when I started trading, it was about $2.3 trillion. So it's just an exponential growth in a very short period of time. But what does that tell me? That tells me that the business is growing, and there are people losing money, and there are people making money. What are the ratios here? The ratios are firmly tilted against us. And when I say us, I'm also a retail trader, but I don't think like a retail trader. I think like a market maker. I think and trade like an institution. And that's why I'm here. I want to explain everything about the market maker. I want to explain and dissect and show you how predictable he can be. I'm going to explain why he is out there to teach you the wrong things and to ensure that you fail. I'm here to tell you the guy who takes the opposite side of your trade. So just in case you don't know, then you need to ask yourself, first of all, who is a market maker? Who is he? Yeah. And once you get your answers, then I want you to listen to my video and actually take time to, digest what I'm going to share. But I will go straight, and I will begin with why retail traders fail. To me, I've been a retail trader and I'm still a retail trader, but through the years, I've learned quite a lot. I'm here to share what I think is making most of us out there keep flashing accounts down the drain, blowing away your money. So I want you to take time and ask yourself, are you in this business to make money or to lose money? Are you doing full time? Are you doing it part time? I'm a firm believer of dedication and commitment to the cause. If you're new to this business and you're maybe you're looking to do it part time, then it's going to be really, really tough. Trust me. Okay, there are people out there doing it part time and they're still making money. I know. But I'm saying the way I see it. This is a business that needs commitment, that needs a lot of focus. And to me, part time, it's going to be a challenge. So, why do retail traders fail? Taking back to basics, what does Baby Pips teach you? The Forex market structure, the market players, what do they say about them? That 90% of the people that trade this market are retail traders. We are the majority, we are the herd. And then we have a small percentage who call themselves smart money. And they go ahead and call us dumb money. But I want to take you back and ask yourself, through the Forex market structure and the way you have been taught, who owns this business? Who runs the show? Who is that guy with the big money? Do you believe that the market can be tossed around by somebody? Do you believe that the Forex market can be manipulated? If you don't, then don't listen to this video. Just close it and walk away. Just go. I'm a firm believer in manipulation. The bigger the market, the more prone it is to manipulation. Yeah. The bigger it is, the more likely there are people out there who are going to toss it where they want. And it's quite obvious because, case in point, somebody in the UK has a portfolio in excess of 50 million US dollars. Sorry, not million, but billion. 50 billion US dollars. Ask yourself, what happens to the market if this guy chooses to buy the euro against the dollar? Do you think he's going to open a 0.1 lot? Do you think he's just going to do a 1 standard lot? No way. We have people who move the market. And the thing is, when you understand the interconnect between them and how they induce demand and how they induce supply artificially, then you know why you see spikes, yet no one has spoken, yet there is no news. And you go thinking that It's just the normal way the market reacts. You would go thinking that it is irregular volatility. No way, you're wrong. We call it the fat finger effect. Somebody just jumps in and jumps out and walks away with billions of money. I'm going to explain to the context of today in this video, particularly because I don't want to go into details, but I will not speak a lot about market makers. But I want you to understand that it is not our business, but it is their business. However smart you think you are, you cannot beat these people. No way, forget it. Unless you have portfolios like they do, hedge funds, banks, syndicate people, syndicate traders, unless you have excessive, you cannot beat these people. The only way you have to, you can beat them is to trade like them and to think like they do. That's the only way you're going to beat them, and that's the only way you're going to be consistently profitable. Of course, that's according to me. You don't have to believe me, blah, blah, blah. You don't have to believe me, period. But I think like them, I trade like them, and that's why I'm here today. So I'm going to teach you something, that is going to probably help you remain consistent. So why do retail traders fail, and why you could be destined to fail in trading, and how you can avoid it? Are you new to the business? How many years have you been trading? Have you made money? Have you lost money? I usually say there is no fun in losing money. No fun whatsoever. No fun at all. Therefore, you need to put in some capital in your account and take care of it and grow it. And don't just feed the beast. Great. So what are the reasons that the majority fail? Retail traders lack education. They go out there, they think they know everything because they've just been through baby pips. You've just learned a few things, and you go thinking that I know it, and you go very fast and you open a live account and you put some money, and then you want to become a millionaire in a short time span, overnight millionaires. Yeah. Question is, have you connected with the right information? Many retail traders don't want to invest in proper education. To me, that's the fundamental reason as to why they fail, because you cannot trade a market that you do not know the dynamics and the operations. You don't know how the market works. You're taught to use indicators, and you go thinking that you can make money long term. Who told you? Big mistake. You don't want to get a mentor. You don't want somebody to walk you through. You want to find somebody who has been there, done it, seen it, and you want to probably just play around in the market. You just hit or miss. Yeah. You lack a plan. You have no plan. You have no rules. You have no discipline. You have no consistency. I'll give you an example. You're like a rookie, a basketball rookie who goes and learns how to dribble the ball or how to dunk and everything, and then you go to the pitch, you're thinking that you're Kobe, and on your first debut day you want to go and score 50 baskets. You're a football player who has just been picked from the academy, and you want to make your debut for your club, and you want to score a hat-trick. Your debut. You're new, or you just gone to the market and you're in the marketplace, and you want to turn your account over and over and make 300% in a week, in a month. So what are you forced to? You're forced to excessively over leverage. You fall into the traps of the market makers. You don't know what this business is about, so you just go and start doing things without questioning what's going on here. I'm here to see what I've just explained happen. You undercapitalize. You just walk into the forex market, you just go there, you with your small capital, 50 bucks, 20 bucks. Brokers tell you that you can convert it to cents, and you go there thinking that you can grow your $50 to billions of money. Yes, some people can do that. I know, but I'm talking about the majority. Not many people can turn such money into big money. Under capitalization, you lack the knowledge on how much money you need to start with. You over leverage, you're forced to take crazy risks. Why? Because we are human beings and we are given a desire to make a lot in a short time span. But not in this business. Forget it. You come into the business and you over rely on the default MT4 indicators. Ask yourself, why are they there? If they were truly working, they will nowhere be, they cannot be on. Excuse me, there is no way you can have an indicator that is freely given by the meta quotes people, and you think that that thing can make you money. Every indicator has inputs. Who doesn't know? The people who made these indicators know how they work from head to toe. They know the stochastic, they know the relative strength index, the MACD, and the ADX. They know the CCIs. They know the Bollinger Bands. They know the default settings. Brokers can make these things fail. It's quite obvious. Everybody uses a stochastic, period 533. I mean, how many times have we seen the stochastic give false signals? How many times have we seen the MACD give false signals? Think about, I will explain a little more about this as we move on, but another reason why we fail is, of course, we have a poor risk management and we lack proper money management. So the approach is purely pathetic. You open a trade and you sit at the edge of your seat because you have taken a greater risk. Who told you hedge funds risk 5% per trade? I will explain about that later. You don't know how to control risk. You're taught the wrong approach towards risk management. You're taught to place a stop below the swing low, below the swing low, or just above the previous swing high, because you have also been taught about support and resistance. A myth. A myth. You're taught about market sentiment. You're taught about currency correlations. You're taught about Fibonacci retracements. Purely myths. Smart money will entice the majority to think the same way, so that price is going to bounce off a certain area because he has meant you to believe in these myths, in this concept. That's why we all react the same way, and that's why price bounces off. But the question is, does support forever hold? Will a certain support level hold forever? What if you're this trader who buys at support and sells at resistance? Does it mean you will always make money? Does it mean that always price is going to bounce off support? What are the few occasions we see a bounce, a squeeze, a full-bodied break below support and the market turns bearish? And you go thinking that, I went in early, I went in. You put sell stops, sell limits, whatever they are called, just below swing low, and you go thinking that yes, the market is going to turn and plummet. And when you're wrong, you don't want to accept that you're wrong. You have a huge ego. Retail traders go thinking that we can just come and just take away the money. You can just come and grab $1,000 a day from this turnover. And when you place a trade and when you're wrong, you don't want to be wrong. You don't want to accept that I made the wrong move. You don't know how to control risk. You don't know how to manage it. You say the market goes and it comes back. And what goes up must come down. You go thinking that you can never be wrong. The market will come back. Who told you? Because you're a human being who is driven by the desire to make plenty. You have a lot of greed in you. You have a lot of fear. When the market turns over you, you just prematurely take your losses. The big boys, the market makers, ensure that you understand risk reward. They tell you, please give me this before you make back this. They give you all the manner of ratios, and they tell you that you should have your risk predetermined prior to you making a trade. Why do they do that? Because they want you to place a stop and they come for it. Give away what they've been working hard for. That's why you place a stop. You're telling your broker you're telling the market maker to come take you out before the market just rides where you want it to go, where you wanted it to go. I'm willing to lose come on. I'm willing to lose this before I make this. That's bullshit. I'm sorry if I sound vulgar, but you don't have to be here. You don't have to listen to me, because it will not make a difference to my life. I don't care. Honestly, I don't. Market makers know how to capitalize on the two extremes, the two weaknesses of any human being. And that's fear and greed. Call them how you want to call them in your mother tongue, in Kiswahili, in whatever, but in English, you call it fear and greed. Any human being has these two extremes. Every time you make money, you go thinking that you're the guru, you're the kingpin here. You're the guy who calls the shots. And before you know it, you get all greedy. Even when you're right, the position is moving in the right direction, you go thinking, oh, I think I was wrong. Oh, you have a lot of fear because the market is currently moving. You have a drawdown and you think that, and you want to chase the market. Fear. Market makers are going to induce you to take positions in the wrong direction. But in your initial judgment, you are right. You go closing your positions prematurely because of fear. You think the market is just going to crash and it's going to kill you, because you had gone long. Because you lack a strategy, you lack a set of rules that guide your trading. You lack proper risk control management. You have a poor money management model and a poor risk management approach. You don't have confidence in yourself. You're so over leveraging. You're taking a lot of risk in a single trade such that you cannot afford to go wrong. You cannot afford big wrong. And yeah, this is how I think. This is me. I'm going to say it like it should be said. You go out there thinking that you're the guru, and you go there telling people that I can make you rich. I am the chosen one. I am heaven sent. Bring me your money. I'm going to turn it to whatever. Forget it. I am an enemy of those people who go saying that. Enemy number one. Never going to be my friend. Why? Because we know how this market operates. We know the law of numbers. I'm going to share why you should be using the right approach to acquire capital. You don't go in public domain and say that I'm the person who was sent. I'm a miracle worker. Come on. Cut some slack, man. Nothing like that, man. Nothing. Yourself first before you go asking for people's money. Make the billions for yourself before you go thinking that you're the chosen one. We do not attract capital like that. In fact, the people who have actually grown over the years and people who have attracted capital never ever talk about what they do. The law of numbers states that you should not judge a strategy simply because you've just taken a few trades and blown off your account, and you've just taken 5 trades, 10 trades, 6 trades, and they're all losers, and you go thinking that, oh, my strategy is poor. Well, I'm here to tell you that the law of numbers, the law of probabilities, states that you need a large sample size to make a concrete judgment about anything, be it a strategy, be it whatever you want it to be. You don't trade 5, 7, 10, 20 trades and they're all winners, and you think that now you have the holy grail. Come on. Let me start and explain just to anybody that, to that rookie guy who doesn't understand what I'm talking about. If you toss a coin, the probabilities of, any coin has heads and tails. So the probabilities, the odds of it landing on the head is 50 and the tail is 50. So for example, if we were to do 10 tosses, there is no way you can have all tosses being heads. You get what I'm saying? There is no way you can get consecutive results through 10 tosses. So what is the probabilities? What are the law states? The law states that for you to actually get same or 50-50 outcome, then you cannot achieve that with a small sample size. You just don't toss 10 times and think that you're going to get 5 heads and 5 tails. And it's gone to an extent, and we can see clearly from the chart before you that you need at least up to 1,000 tosses for you to actually get that smoothened outcome, whereby the heads and the tails are actually competing. The outcome is almost the same, 50-50, yeah? So this goes back to our strategy as forex traders, that you don't judge a strategy, whatever strategy you use, I don't care. You should not judge it by simply placing 5, 10, 50 trades and you go thinking that, oh, I found the holy grail, or, oh, this shit doesn't work. And you go through it and you start jumping from strategy to strategy, trying to find out. Your approach is wrong because you don't give it time to judge a system, to judge a strategy. Any strategy will require that you trade 100 trades, 200, 500 trades, then get to see, are you making money or losing? You need a large sample size to actually judge any system. That's all we're saying. Don't trade and just pick a few trades and they are losers and you give up and you say this didn't work. Take time to validate what you say. Just take time to give it enough samples. Just keep on trading. Have the right money management approach. Hedge funds never risk 5% per trade. They risk 0.1%. Myself, I do 0.3% per trade. And that's why when I open a position, I am not scared. I'm not seated at the edge of my seat like many do. I trade with confidence. I don't trade with a lot of panic. Because what you do is that you calculate, you over leverage, and then you calculate, oh, what's my lot size, blah, blah, blah. And then you go thinking that, oh, my first trade should be X number of lots. And then you sit at the edge of your seat, you're excited, the market is going against you, the market is going in your direction, you think, we need to trade like smart money, or trade in the right way rather. You don't have to do what I do. That's all I said. Smart money market makers are out there to crook you, to make you believe in a certain way of trading, and then they want you to follow that, and then they want to catch you at some point in time. Make, then you hit, boom, you lose 50% of your account. Before you know it, emotions come in, and then you get all moody, sentimental. Oh, before you know it, they take away the 50% that remains. And then they go smiling, they get hefty bonuses for what they've just done to you. And you go thinking that, oh, I know my mistake. I've just learned, I just know what I did. And then you go, you repeat it over and over. You keep blowing accounts. You keep messing up people's money. And you keep replenishing accounts until you retire. For how long are we going to have this pain and agony of losing money? If you don't take time to validate or to ask yourself, what is it that I'm doing? Is it keep repeating the same mistakes? And that's stupidity. You're using a stochastic period 533, and you go thinking that every time it pops below 30, you go long. And every time let's be real, man. If trading was as simple as what you're seeing here, we'll all be billionaires. If trading was as simple as taking that default indicator and putting it in your charts and you go thinking that you're going to make money, if trading was as easy as that, we would be all billionaires. You go pick a MACD, you put it on your chart, and then the signal line those of the club giving false signals. It's the most famous indicator that many people use. Stochastic MACD, convergence, divergence. Yeah, whatever you're taught. I don't know. If this stuff was to make you money, then so be it. Just try to use it, and let's see how profitable you are. You talked about some relative strength. They tell you every time the signal line is above 50, prices are supposed to be bullish. And they show you how to get the divergences and everything. The concepts are just don't make sense. You keep buying, and you're stopped out. Step 4, stopped out 28 points. Step 5 is you stopped out at 36. You keep losing money because you're taught to never trade it without a stop loss. Oh, the trend is your friend. Never trade against the trend. Keep respect the trend. It's okay. But the guy who said that never said that trends don't last forever. Then you go long, there's an uptrend, you go by, and then it turns on you, and you say, "Oh, I think I came in late. I should have caught it down there." So, what makes you think? What makes you not have done what you just said? I should have caught it down there before it turned, so that I would have profited at maximum. Are there people who know when the market is just about to change? Are there people who know when the tide is about to change? And the answer is yes. With volume spread analysis, you can actually predict to a certain percentage of accuracy that the market is just about to turn and this trend is just about to end, and you catch it in an early stage. We want to be using leading components so that we go in as early as possible so that we maximize our profits and also minimize our drawdowns. You're not going to achieve this through trading with the strength index. Show me somebody who has done it. Yeah. And I'll be all hats off. Yeah. Volume is the only leading indicator that I know of. To me, it's about leading, not lagging. I'm never going to put a moving average on my charts. Never. What for? Just from the word moving average, it's an average. It's an average, whether simple or exponential or linear weighted moving averages. We don't even care. The thing is, they are averages, and it's an average of a price. Big up to yourself if you're a price action trader, because price action is a good approach. We say price is number one indicator because you can never be wrong when you look at the candlestick and you make decisions based on the price action. But you thought about crossovers. You thought about moving average crossovers. Who told you? Who told you? Yes. What if the market is not trending? What if the market is moving sideways? Are you going to get signals? Come on. All those moving averages will be flat. Whether simple or exponential, you're taught exponential may react faster to price. And the simple is a little bit slow. And the linear weighted average is extra. Come on. Moving averages are good, but only if you pay attention to the 200-day moving average and the 100-day moving average. Anything below that is just a waste of time. The 200 is known to be a critical indicator as pertains to knowing when to book your profits or when to, rather, how to manage your trade. You can actually use the 200 MA to actually give you a clear picture of the overall trend. But I'm not here to talk about moving averages. I'm here to talk about the VSA. VSA, we have good people out there who have actually gone an extra mile and shared to us powerful tools. But the question is, do you know how to use these tools? Better volume indicator is freely given out there. But many people don't know how to take advantage of what the good people are given. Yeah. You're given something and you don't want to pick it, you don't want to take it, you don't want to own it. You don't want to question yourself, you don't want to ask yourself, how does this thing work? Even if you don't know, you're not humble enough to ask somebody who knows to show you how it's done. But the better volume indicator is purely an histogram. Of course, the guy who coded this was for TradeStation, but it has been recoded for MT4 in the MetaQuotes language, MQL4 language. So we have copies, which I believe many people have it. Personally, I have been able to share this with people. But it shocks me Not many people know how to use it. Not many people know what these colors mean, and not many people know the patterns. Not many people know the topping patterns, the continuation patterns, the bottoming patterns. So you go there and you start playing around with it, and you're not playing around. You're just wasting time. Yeah? You don't know the principles of the beta volume indicator. You don't know the principles of volume of VSA. VSA has many schools of thought. Definitely, we have many people who trade VSA. But the people who trade the beta, analysis, paralysis. I just don't put charts. But Mark Douglas, the author of Trading in the Zone, states that the best traders have developed an edge. And more importantly, they trust their edge. They are confident. So question is, have you found your edge as a trader? Have you found something that works for you? Or are you still doubting? Are you still clouded in that point where you're not quite sure about what you're doing? My trading edge rules are simple. That for me, I want something that has a high probability of success. I want to have something that gives me a good win ratio. Yes, I know some of you will argue, oh, win ratio, blah, blah, blah. That simply means that you're going to be profitable and that there may be that one losing trade can wipe off your account. It can only do that if you have a poor risk management approach. I don't believe that you can have 9 out of 10 winners and then that one loses your money. No way. Unless you're pathetic as pertains to risk management. My trading edge is supposed to have it's supposed to enable me to enter and exit trades without conflict or stress. I want to jump in, buy, and then I want to be relaxed. I want to sip a cup of tea without having to every time you just stare at my chart like the world is just about to end. I want to open a position and relax and wait for the market to move. My trade decisions are dictated by volume, VSA, and not by my preconceived beliefs or opinions. Some of us traders have this habit of, oh, something the market is just going down, or you pick your phone, you call your fellow trader friend of yours, and you go asking, you guy, what do you think? You think this thing is going to go down? Do you think it's keep going down? You're asking for opinions. You go to forums and you're asking people, what's your outlook on the euro? What's your outlook on the yen pairs? Because you lack strategy, you lack something that governs how you trade. You're looking for opinions of other people. You want somebody who's going to back up your premise. You want somebody who's going to give you confidence that yeah, it's going down, but it's going to go up. But as for me, it's about me. It's about me and my team, and me and the people who we trade VSA with. Definitely, I have a Skype chat room where we share all these things. But even without them, I can still trade alone. The thing is, you have to be confident enough with your ability. You're not supposed to be a trader who is meant to believe in myths that I just talked of earlier. Preconceived beliefs that the market is just about to turn at a certain price. Yeah, so you go pending orders, and then the market makers come trigger you, and you go long, and they drive the market down. They mark it down, or they mark it up, depending on what you did. And there you go. They go hunt your stop loss, and then you're finished. And you go thinking again, oh, I've known my disc. I've known my I've just discovered what I did was wrong, and let me give it another shot. And the cycle continues over and over again, thinking that you have not known your mistake, until you become so discouraged and you leave the business after losing billions of money or millions of money or thousands. And if you're dedicated enough, you're committed, you may have commitment, but as long as you're doing the wrong stuff, you will keep funding your accounts, like I said, until you retire. You're not here to fund accounts. As a trader, you're not supposed to be somebody who keeps funding accounts, yeah? You should be doing more of withdrawals, yeah? Feel me? You have to be doing withdrawals, if not every week, daily. If not daily, every month. You have to develop a strategy. Does it really work at the moment of decision? Are you this guy who places a trade and then it goes drawdowns, and then all over again it starts coming back and you're in profit? That tells you something about your strategy. The accuracy is quite low. A strategy needs to have precision. You need to place a trade right at the moment when there's no supply and the market changes direction and starts coming up, because when there's no supply, demand has to kick in. It is at that point that we go long and pull our trigger with a lot of confidence, with a lot of belief, and we know we are not doing guesswork. So the question is, does it really work at the moment of decision? Are you opening a position and having to wait for several days before it goes into profit? If you have such a strategy, man, throw it away, man. Throw it away. It's going to waste your time and your energy and your money and your resources. A strategy has to have precisions, period. Does it have a high degree of probability or predictability? Are you trading with an approach that market makers can actually guess? This guy, he's using this and this. Because if they know it, they're going to come and take your money. If your strategy is predictable, oh, this trader seems to be using a moving average crossover. He's using an exponential 50 and an exponential 100, and he has a small one where he says there's an EMA 7 period 7 or 14. Market makers take time to study your account. Market makers take time to know how they're going to come for their kill. And that's why you make money today, tomorrow, and then the day comes and they take away half of your account. What am I saying? I'm saying your strategy should not be predictable. Feel me? It's not supposed to be a predictable strategy, whereby you're placing trades and then you're putting stop losses and the market maker can see them. It's going to count for them. Trust me. And when you see the market coming for your stop loss, what do? You drag it. You know, the MT4 nowadays has that ability to just drag the thing down. and you keep dragging it down, and you forget that your risk reward is no longer a risk reward. It's just a bunch of theory that the moment you modify that stop loss, you're just fooling yourself, man. You're just fooling yourself. You're just playing around with your brain, man. Fair, man. What we are saying is that you're not supposed to be predictable, man. If you're a predictable trader, you become the hunted. You are the person that is going to feed everybody in this global business. Your account will keep crashing, and you're going thinking that, oh, this business doesn't work. Your strategy should not be predictable. Your strategy should be simple. It should be simple to you as the creator. And when it comes to critical times of making decisions, it should be equally as simple to you. Because your strategy should tell you that, hey, yes, this is a setup, but I'm not going to take it. Somebody's just about to speak. If you're this guy who doesn't respect fundamentals, man, it's just a matter of time before you give back all that money. Technical, fundamental schools of thought have to go hand in hand, man. If you to become a good trader, you have to pay attention to both, man. If you're a fundamental, you have to really take care of the technicals as well. Your strategy should be able to yield more winners than losers. I think I've just spoken about that. You should be able to rack in more winners than losing positions. If the strategy gives you the exact opposite, man, it's just going to drain your account. Your equity curve will look like water down the bridge, man. It's just slanting, just moving in the wrong direction. Yeah, you understand? You have an equity curve that looks like zigzag. Yeah, up, down, up, down, up, down. That basically shows you that you don't know what you're doing. You're not consistent. A strategy should be consistent, should be able to deliver long term. You should have at least traded an account for a year or two without having to fund it. If you're getting anything other than that, man, just go back to your drawing board or whatever. Yeah, it's entirely up to you. But what does my easy approach mean? My easy approach means that my strategy, number one, has to be effective. Like I said just before this slide, that it has to give me an edge. Otherwise, if I don't have an edge, I don't have a strategy. Provides me with an effective edge in my trading. I want to make a decision in a split of a second without having to think. You know, ta-da, pull the trigger. I don't have to call somebody to ask him, what do you think? I'm just about to go long on pound dollar. If you're still trading that way, yeah, man, you can keep doing it, but you can be sure that the big guy is just about to come for that account, man. It's a matter of time. Your strategy should be accurate. I just spoke about this again. Should give you a high degree of probability and predictability. Less drawdowns. You pull your trigger and immediately you're in profit. And immediately in profit, you now introduce the trailing stop loss, you know, and not the stop loss prior to you making the trade. I mean, that's a waste of time. It's going to be hunted. Tell me, it's going to be hunted. Trail profits, trail your profits. That makes sense. That makes more sense. And not going and telling somebody, I'm willing to lose this before I make this. Pessimistic way of trading, man. Your strategy should be accurate. Should have a high degree of accuracy such that you just go in like this and you're in profit. And even when you have drawdowns, you know how you're going to manage them because you have a strategy. You have a laid down way of trading. Set of rules, feel me? Set of rules. Your strategy should be simple. Who told you that a complicated chart is going to make you money? I know traders are different. I know what you're thinking. I know. Yeah, whatever. But I'm a firm believer of simplicity. And that's why they say there's beauty in simplicity. You don't want to go date it. You don't want to go date a girl who has a lot of makeup. Okay, at least that's not my view about people, but personally for me, I just don't date a chick that has a lot of makeup. No way. I believe in beauty, simplicity. Same thing when you talk about our charts should be simple and not have crowded with a lot of indicators, Bollinger Bands, others have a lot of color. It just makes you, we call it analysis paralysis. You suffer from that. You want to have it simple so that you can get quick snapshots of the market and make a trading decision very, very fast, without having to call people, with less stress and less anxiety as well. Yeah. Simplicity. That's all I'm saying. If you want to go looking like somebody who you want to go looking, there are no gurus in this business. Yeah. So if you want to look like a guru and you make your charts very complex, then you can only be fooling yourself, nobody else. Yeah. Your strategy should have yield. Your strategy should yield results. We should be able to see growth. You should be able to see that you're making progress. It should yield a higher ratio of winning trades versus losing trades. It's a game of numbers, people. It's a game of numbers. And they say numbers never lie. You show me results, then I am going to probably believe them, because you don't come telling me theory. Theory is theory. Actualizing that theory is another story altogether. It's a game of numbers. Numbers never lie. That's what they say, yeah? So you can never fool yourself that you're making money while you're not. You know a lot of theory, but if you cannot actualize what you know, you're busy wasting time. You go reading a lot of ebooks, and you think that those ebooks are going to turn over your account and they're going to give you 100% results on your account. Growth on your account. Never works that way, people. Make it work. Pull the strings and you need to see the results on your charts. On your MT4 account, whatever. Yield, that's what we're saying. It should yield results. Market conditions say that, my approach, I need to know what the market maker is doing. I need to think like him. I need to predict. I need to know exactly his next move. If you don't have these skills, it doesn't matter what strategy you use. But if you're not able to think like these guys, if you're not able to predict their next move, becomes a challenge, man. But for me, number one, you have to have market making knowledge and skills. You have to predict, you have to be able to know what these people are just about to do, and you have to know how they manipulate price and how they manipulate people, the market. Despite knowing that, you have to understand that the market moves because of demand and supply. The imbalance in these two is what makes the market tick. Of course, supply outweighs demand, markets go down, demand outweighs supply, markets go up. And you move to another level of actually getting to know how it's done. When do you know that demand is over? No demand, no supply. Powerful words, yeah? Combine that with a little bit of price actions, and there you go. You have a system that many people are envious of. And what follows is results, man, and consistency. And it's as simple as that. My chart setups are purely very simple. I have average price bars. I have my indicator with me, my beta volume indicator. Credit, big up, man. The author of Better Volume, man. Respect. If you're watching this, thank you, man. You have no idea how you've helped many people. make money the easy way. I have my trader's dynamic index. I have my average daily range. I have my previous day high and lows, period. I need to know my playing field in any given day. I need to know the extreme highs and extreme lows that we expect the market to move in. When I have my playing field with me, it becomes very easy for me to know exactly the two extremes, and I know that the market is actually going to misbehave and actually crash these extremes if they are fundamentals. That's what we're saying. You have to respect the fundamentals, because fundamentals have ability to distort any technical study. And if you have not seen this, then you have not been trading for long. You know, if you have not seen this happen, of course, you've not been trading for long. Yeah. Just should be simple. Yeah. That's all I'm saying. Yeah. Man, let me sip some water, man. I want you to look at my chart setups and tell me if I'm a crazy guy or if I'm a mad person just making noise on YouTube. I want you to go back and just check several weeks a month of your favorite pair and try to spot these M&W patterns like I've always shared with people. I've always shared on my social media pages and everything about my chart setups. And anybody who has been keen enough can see clearly that it's a simple chart with no fallacy. I mean, no fuss. Yeah, just keep it simple. Yeah. The market maker faces are known. The market maker cycle is known. If you don't know this stuff, please take time and learn it. If you still cannot understand what's going on, look for me. Accumulation distribution. That's the game. Your ability to spot these accumulation phases and ability to know what's happening inside the accumulation phase, what we call the black box, can make a big difference in your trading. If you know why accumulation is taking place and why they're accumulating, not what they're accumulating, knowing why they're accumulating, then you're better off, man. You will find your answers. In the chart that I'm just about to show you, you will find the M and W patterns. You can see any pivot reversals on M2, M5, M5, M1. If you want to go to those timelines, of course, you're free to do it. VSA works on any time frame. You can see reversals and formations of 50 pips outside, and you can see the divergences of TDI. Just do it on your pairs. Talking about M and Ws, of course, not everyone knows what I'm talking about, but this is what I mean. Failure. Second leg, market thrush to the upside with a high volume, but fails to beat the high of the day, HOD. Market comes down, definitely for an extended stop hand or something, and then the market tends to. We have traders that trade the 1, 2, 3. So the 1, 2, 2, 3, 2, 3 leg, they short or long with high volume, but you can tell it from VSA definitely, and we can know that if the market comes down with high volume and fails to beat the lows or fails to beat the highs, then something is wrong, and that's why we say a failure swing, top or a failure swing bottom. That's what I mean. That's the chart right there. You can take time and capture a screenshot. I don't care. Take it, go use it, make money. I don't care. When you make money, there's no way I'm going to lose money, and that's why I'm here to share these things, man. You go saying that, oh, if a strategy truly works, people should not talk about it. Man, I'm the weird species then. I talk about what works. You can go think what you want to think, but like I said, I don't care. Failure swing low, LOD fails to beat the lows despite high degree of volumes, and then we go long, and you can see where we buy and we profit the easy way. We together? Again, just open a chart, keep it simple, put your indicators, TDI, you need to know the extremes of the market, you need to have the daily highs and the daily lows, and we need to know, and you need to be able to spot the accumulation phases. You can see it right at the blue candlesticks. If I was doing this on a webinar, then I will be able to actually show you. This is just a picture that in my presentation. I will be able to use those drawing tools and show you what I mean and what exact point am I talking about. But we can clearly spot the accumulation. I've shaded the area blue candlesticks. Yeah, you see them. It's accumulation happening there, and what happens? The market breaks to the upside and hunts the stops, and then market reverses on the other direction. Can you see an M? Can you see an M? Good. And I can go on and on and on and on and on. There we see the W. We see the market makers telling us that, hey guys, this is the direction that we need to take. The market makers are basically showing you that where you ought not to go, and you can see the double W that we can see there. And what happens? The market changes direction, and there, bingo, you make your money going long. And you can see the couple of trades that we picked on that particular day. Accumulation, spot the rates, and then you're good to go. That's all I'm saying. Know the extremes and pull your trigger based on that. Yeah, that's what we're saying. Yeah. So if you're not able to pick these things, then it becomes a challenge to you as well. So sorry guys, I was not sure if you could see the charts that I was sharing, but I have that sorted out. But all we're saying is that these people are predictable. Yeah? So it just entirely depends on if your ability to see them and ability to react to what they see. Same thing. So for the accumulation phases, extended stop hunt, you can get the W's and you go long just prior to NFP and you profit. Same thing. Can you see what I'm talking about? Good. if you don't see these things, then it becomes a challenge to you and everybody else. Yeah, and you keep trading like the retail guy, and the cycle continues over and over again. And you go asking yourself what's going on, and nobody can give you answers other than yourself. We're talking about the extended stop hound, the accumulation phases, and when you pull your trigger to go long or short. Yeah, awesome, good. I just wanted to make sure that people could see my slides, and you people could be able to actually react to what we are talking about. Yeah, so I'll stop there for today, and look forward to the next videos. And you people, you need to have a good time. And I need to start on my weekend on a high note, so we'll probably talk again next door. But be well, stay safe, be very happy, and yeah, let's talk again. Let's just talk again next time. Goodbye. Take care.